Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB here on AusBiz. I'm Juliette Sarli. Great to have your company as we round out a trading day where we've kind of ended fairly flat there on the local market. We were having a pretty solid session to kickstart the trading day, but then we've finished fairly flat there on the CBA 200, similarly on the ASX 200, and really as we started to see weakness coming through from index leader CBA, shaving about 30 points off the overall index as the profit takers moved in. We've been hearing for some time, of course, that CBA is overvalued, and today down by quite a significant amount. So that has led to wobbly Wednesday. We were hoping for a bit of a better session on the local market. Don't forget as well, we also had the RBA minutes coming through today. But CBA's crash has, as I mentioned, really meant that we are pretty flat today, with the Commonwealth Bank sliding to a 2-month low. And then the RBA minutes showing not consistent, that a third cut in 4 meetings wasn't consistent with their rate strategy, as so many of the analyst notes have come through though today, really indicating it's all about timing. And that's kind of what we alluded to from the press conference with Michelle Bullock following the RBA decision, that it wasn't that they're changing course, it's just that they wanted to hold pat and really wait for some clearer indication of how the economy is faring before cutting again. We did, of course, hear as well in the minutes that they were focused very much on what is happening with the so-called taco trade and all of the uncertainty that we're seeing coming through from the Trump administration. Let's have a look at sectors today. We did see some very solid moves coming through from the miners, not enough to offset the weakness in the banks. Iron ore prices in Singapore actually are continuing to rise, and the iron ore contract above $103 a tonne. BHP up there by more than 2%, Fortescue up by some 3%. Healthcare stocks also looked pretty solid today, with the exception of Ramsay and Ansell, but you can see Cochlear up by 31% and CSL was up by 3.3%. And then, of course, it was the banks that dragged us lower. Have a look at that. CBA closing lower by more than 3%, $172. ANZ off by 1%, NAB down by around 3% as well. Only Macquarie there in the green. Well, Insignia, of course, in focus today. Shares up by 12.5%, agreeing to a $3.3 billion all-cash takeover by CC Capital. Now, the offer price of $4.80 per share, a premium to the closing price in December when Insignia first got that takeover offer from Bain. Praemium, though, heading the wrong way. Reporting total funds under administration rose 12% as of the end of June. Perpetual shares a little higher, reported a jump of 2.5% in assets under management at the end of the June quarter. And Champion Iron shares up 4.5%. It's entered into a definitive agreement with Japan's Nippon Steel and Sojitz to form a partnership for its Kami project. Nippon and Sojitz to contribute $179 million for a 49% shared interest in the project. And BetMakers, it's up 20% today, posting its strongest quarterly update to date, with revenue in the fourth quarter up almost 9% to $22.6 million. Let's welcome to the COB Julia Lee from FTSE Russell. And Julia, we had that really solid move in iron ore players today, but unfortunately the selling in CBA has meant that we've ended pretty flat.
It looks like the great rotation has been very much in focus here in Australia, where we are seeing a rotation out of more late cycle banks into more early stage materials. If we have a look at the market, I guess it moves in different cycles, and with CBA trading almost at a record in terms of valuation at 29 times earnings, that's way above its 10-year average of about 7 times in terms of the PE ratio. So we are seeing a rotation out of, I guess, some of those late stage players into more materials, where we are seeing a recovery from China helping to boost prices. I guess if we have a look at iron ore prices, very much in focus, given that we have seen iron ore prices hitting a multi-month high, both on the daily and as well as on the Singapore exchanges today. If we have a look at iron ore, part of it is the demand side. And I guess if we have a look at commodities, they're driven either by demand or supply. And on the demand side, China's plan to build the largest dam in the world in Tibet is really helping to boost prices. Now, this dam is expected to use around about 3 to 4 times the amount of steel that the Three Gorges Dam did. So around about 2.4 million metric tons, and that's helping to support prices. In addition, what we are seeing from the steel mills at the moment is that margins are better, and that's stimulating production as well as encouraging purchases of raw materials. And of course, the raw material for steel is iron ore. So pricing very good, and we're seeing that reflected in our big iron ore miners like BHP Billiton and Fortescue, which have performed very well today. But on the flip side, we have seen that rotation away from the banks.
Yeah, we absolutely have. And of course, we're counting down to reporting season as well. Julia, what are you watching out for? What are you going to be doing Control F on the reports that hit the ASX?
Well, I know we've been talking about Commonwealth Bank and it's had a fantastic run up, but it does now represent more than 12% of the Australian share market. So it's going to be very much in focus when it releases its full year numbers on the 13th of August. We have a look at market expectations. It is that we'll see earnings per share of $3.07. That's an improvement from last financial year where it came in at $2.78. So that's going to be a big one for the market. Not only that, we know that costs have been rising. So I think those companies that do have pricing power and are able to maintain or even improve margins are in a good window seat to improve their share price performance. But of course, in terms of consumer spending, we know that savings has now deteriorated quite substantially. There's quite a bit of promotional activity about as well. So I think on the consumer side, it's not just going to be about sales, but also that margin preservation that's going to be very much in focus. And let's not forget the tariffs. Any outlook statements are going to be very closely combed through, especially with those tariffs still very much in focus and the impact on the Australian companies still yet to be seen. So I think this is an important one. Last financial year, we saw earnings declining by 4.4%. The financial year for this reporting season, we're expecting to see flat growth, and that's the consensus. And FY28, we're expecting to see growth of around about 6%. So those outlook statements are really going to feed into FY26 earnings expectations.
Yeah, absolutely. And of course, also the tariffs in focus, and particularly as we head down to the deadline for some of them coming into effect on the 1st of August. What is the key focus here for Aussie investors?
Yes, the extended tariff deadline on the 1st of August fast approaching. The markets have been very much ignoring it, expecting the taco trade, Trump chickens out really to Trump here. But looking at the tariffs and the possible implication for Australian investors, I guess a key one is the Aussie dollar. The Aussie dollar has a high beta to global equity sell-offs, and we saw that back in April. So watching that in case there is market volatility around that 1st of August date. But for long-term effects, really some of those effects are going to come from the responses from our trading partners. So in particular, watching sectors like the materials, the energy and the industrial sector, which are more exposed to potential volatility there. And really in terms of Australia, Australia hasn't been specifically targeted. So it's more around the spillover effects, the responses from our trade partners, and also impacts on Aussie companies that we'll be watching.
Absolutely. Now, we touched on the RBA minutes out today, Julia, giving us a bit of a more clue as to why they held, which shocked many in the market. What are we expecting, though, with the Fed's decision next week?
The Fed one, I think, is a bit more straightforward. We've seen some quite positive numbers coming out of the US. So some good surprises coming through there, which I think means that the market has priced in a no change for this particular one. Sorry, just getting over a cold. But the key is really going to be next meeting, and any sort of hint that we'll see a rate cut will be closely watched. But the market's pricing in that it'll be the next meeting that's live and that we'll really see the rates on hold for the US.
Yeah, let you get a drink of water. We've all had that bug going around. Julia, stay well. Julia Lee there from FTSE Russell. All right, let's have a look at the stock of the day. It was Praemium. We heard from our experts, Josh Barker from RiverX, Kai Chen from MPC Markets.
What it's doing is picking up market share, just like Netwealth and Hub24 are. But where it's picking up market share is from some of those older, more traditional sort of platforms that aren't focusing on that area. So your Insignia Wealth, for example, which has some takeover offers, so I'm not sure what will happen there. But it's an area that they're looking to really expand on in that niche area as they come out with these new products.
But really what we're seeing here is a mixed story, because essentially they've launched a new Spectrum platform, and what the goal of that is, I think the whole industry is moving towards something where it's more customer focused, delivering a platform that's an overall solution. Whereas at the moment, there's a lot of disjointedness where you're getting your holdings, seeing this aspect of it, private assets here and there. So the goal is just basically tie it all into one integrated platform where the end user has a very smooth experience. And I think that's what they're trying to achieve with Spectrum.
All right, well, we have finished the trading session, and of course we erased some of those earlier gains, but still finishing slightly higher on the ASX 200, I believe. But Insignia was one of the better performers, of course, just really reiterating that it is asking shareholders to recommend the takeover offer from CC Capital. Imdex also had a solid session. It was up by around 10% today. West African Resources as well, as we saw gold at a 5-week high, and Ramelius up 8%. To the downside in the big end of town, a little bit of weakness coming through from some of the lithium players. I had a great chat though to David Franklin from Argonaut about some of the lithium players that are on his radar. You can check that out, ausbiz.com.au. The jewellery maker Lavisa, or seller Lavisa, down about 4%. CommBank, we mentioned, really wiping quite a big chunk off the index's point gain today with a 3% drop, and the NAB fell down by around 3% as well. In the small end of town, we saw BetMakers Tech. Now, it came through with an update today, sending shares up by as much as 20%. Worker also having a good day, and WIA Gold riding on the back of that strength in the gold price. In the small end of town, the losers today included Strike Energy, down by about 14.3%. There was an update there with Carnarvon, I believe, and Strike, but it was down 14% on the close. Zero Resources off by around 10% as well. Tonight, we hear from US Fed Chair Jay Powell. This is, though, a bit of a speech that will have been already flagged ahead to Washington, so maybe not so much clues as to what we're going to get from the central bank next week, or the pressure that President Trump has been putting him under. We do have the Richmond Fed Manufacturing Index as well, and earnings from some big bellwether companies, including Coca-Cola, Dr. Horton, GM, Lockheed Martin, and Texas Instruments. Tomorrow, locally, we've got the leading index for June, and also a continuation of a lot of these quarterly updates we're getting from the miners, including Iluka, Northern Star, Paladin, Woodside, Westgold, which of course we mentioned did really well today. Let's see where the index has finished the session, due to being dragged down by CommBank. Pretty flat there on the CBA 200. A little bit more of a lift coming through on the ASX 200 on the close. In fact, finishing higher by 9 points, a tenth of 1%, 8,677. And again, if you took out that weakness from the banks, from CBA, it would have been a much better day for the local market. We will be back to do it all again from tomorrow, 9:45 a.m. Eastern. We'll see you then.